A lot can change in this market. Friday, pre PCE, trading on the lows of the week. Like PCE, Goolsby, I mean, he goosed the market. I mean, I don't know what else to say. Strong close, strong market. Will Santa Claus be coming to town? We'll talk about the dynamics of the Santa Claus rally. Rumble, that's your big winner today. Tim Quast. Tim is so fired up to come on the show at 8:35. He'll talk about what he's traded and what he traded in this week. Of course, supply and demand. We're fired up on this short week. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We are fired up, or at least I'm fired up here on this Monday morning. We're trading modestly into green, up 4 3/4 handles. Kind of pop Friday night, but just kind of fading here, but still green on the session. The buck will not pull back. Down day on Friday, back up again today, 61 cents, 107.96. TLT, new low, the move on Friday. It's trying to rebound. USO down 35 cents, finding good support just above 72. GLD and gold and silver ETFs going in opposite directions. GLD down 90 cents, 241.30. SLV trying to get back above 27, right at 27. That's up 8 cents. And Bitcoin futures, well, bad couple days to end the week. We're trying to form a bid here. Bitcoin futures down $96,485. Let me stop the screen share. Let's bring on Triple D and let's bring on Christian Fromhertz. How you guys doing? You guys fired up?
Trying to be fired up, but pretty tired here. This was a late night. It was a good weekend, late night for me. We had this neighborhood Christmas party going on, which was awesome. We had Dave on the guitar, Scuba Steve on the vocals. It was an excellent night, but I'm pretty tired here this morning.
How late did you stay up?
I didn't go to bed till 2:30, so I am tired. So definitely tired, but you know what? The market doesn't rest. And people were saying to me last night, you can't get up at 2:30 or 7 o'clock to trade. I'm like, of course I can. I have to. I have no choice. And Joel would scold me if I missed, be like back in the days, when I'd show in that bright trading office, and I'd be late for the open and Joel would scold me. So, of course I'm here.
Come in. Christian, you won't believe this. Have you heard this? He used to come in at 9:29 and 59 seconds.
I know. I came in 1 second before the open.
And that's a violation.
I would tell him that
22-year-old punk kid.
It was his own money, but I said, you know what? I might not let you trade today because you don't respect the market. And boy, things have changed here.
It's true, actually. Yeah.
We used to have Go ahead, sorry.
Christian.
I was going to say, we used to have a rule when I used to trade on the Merrill Lynch Institutional Trading Desk. Since it was more of a derivative desk, Delta One desk, I think our rule was 7:45. If you came in past 7:45, you had to buy lunch for the whole desk.
Oh, gosh.
And that was violated quite a bit during the holiday season because folks would be partying like Mr. Dennis Dick, during the holiday season, and there was a lot of violations. There's a lot of lunch being bought over those times.
Yeah, so if you weren't one of those parties, you were laughing. You get lunch bought for you every day. That's how that's like the deal right there.
Absolutely.
All right, well, let me start out with an apology to Christian. I said on Friday, I'm like, you bull.
I know. We wanted to be bearish so bad here, and we were fighting Christian on his bullishness and saying, "No, it's Christian. Look at the charts. We're broken here. We're gonna go down." And Christian's like, "I don't know. Christian Fromhertz, right again."
Hey, that's what makes a market, guys. I mean, we obviously didn't have a lot of information, after that big move down. What I really the conclusion that I had was like, first of all, there's a lot of charts that we went through that blown out to the downside, but we were pretty oversold when you look at the McClellan oscillator. So in any event, it worked for a trade.
Wow, nice. It was a nice call. Like we were saying too, you got to wait for the information, and the PCE was light, and that's what started it. The rally started going off the PCE for sure, but then we had Fed speak too, Joel, and you were talking about that, and Fed speak coming out, and basically, who was it? Goldsby?
Yeah.
Who was it?
Yep. Austin Goolsby. Yep.
And he came out and basically unsaid everything that Powell said and saying, well, we're still looking at more cuts here. And the market was applauding, and the market's like, obviously these rate cuts, potential is like heroin to the market. Couldn't help itself. Yeah, here we go. And everybody started getting on board. And the S&P, we know, huge reversal from being down 50, 60 points in the morning to closing up. Well, actually, it gave back a little bit at the end of the day. But at one point in time was up 50 or 60. I don't know if we closed up that. IWM a bit weaker. It didn't get as much kick as the S&Ps did, but they really went back to the well. They really went to those retail darlings, that they love, obviously. We know Tesla's part of that. But we know, even if you were talking quantum stocks before, those are up this morning. That's really what's happening here this morning if we talk about today's action. It's kind of like back to the well, the retail well. What's being talked about in those chat rooms? Which stocks are they loving here? It's not your staples and your oil stocks. And, it's like moving up on, and actually it's a lot of Kathy names, that are moving up here today. So, Tesla's having a very good day. So the Tesla weekend trade works once again here. Christian Fromhertz, is talking about Rumble. There's a Rumble in the jungle. RUM news Friday night came out, and Tether taking a stake. And that stock's up 42% here. So maybe we start there. Maybe we start with our big news of the day. It's obviously was from Friday night, but it's getting priced in this morning here. Christian, what are your thoughts here? Rumble in the jungle?
Oh, geez, I don't know. Rumble is not a name I've traded in a long time. Yes, nice to have some news out on it. I just wanted to go back with what you were saying too for just a quick second with the price action. I know we're going to talk more about that, especially around like what happened around the close. But to your point, I mean, it was those names that have been really strong. Apple is in there too. Apple went back to new highs. Palantir's at new highs. So even though we've talked about some of these groups, just as you were talking about staples, and so consumer staples and things like that, industrials, but these were not your leaders. What we saw on Friday, it was the same stocks that are moving up. So kind of begs to the question is that going to continue to be the case? Are we just going to continue to see this momentum towards the end of the year? Not that Apple is a momentum stock, but I view it as a quality stock.
Yeah.
And then we could talk more about Rumble, which I don't really have that strong of an opinion on. Yeah.
I think you make a good point here with it's seasonality we talk about, and Santa Claus rally officially starts tomorrow. So the way Jeffrey Hirsch from Stock Traders Almanac says, the Santa Claus rally is the last 5 trading days of the year, and then the first 2 days of the new year. So that would bring us to, we have 6 days left right now, so today doesn't count. But 24, 26, 27, 30, 31, and then obviously 2 and 3. So, I mean, Santa Claus often comes to town, and usually, from my experience, is Santa Claus likes to come to the leaders of the year. So stocks that have been very strong during the year, obviously, sometimes sort of strengthen to the end of the year. The mechanics behind that, because obviously money managers want to show some of these leaders on their books and say, hey, at the end of the year, we do own this stock. We did own it, even if they didn't. Maybe they owned it only for a couple of days. But, a little bit of window dressing towards the end. So lots of, reasons why. And then it's a lighter volume week for institutions, but actually retail is actually quite active. So a lot of times during this week, it's driven by retail. And that means it's driven by retail names, those names that are really loved. So it's not surprising that we start off even this week, a day before the Santa Claus rally, with Tesla getting an 11-point pop after yesterday's or Friday's, sell-off.
And
you said the last 5 trading days of the year and the first 2 of the new year. Wow.
I believe that's correct. Am I wrong? I believe that's correct. That's how Jeffrey Hirsch does it. Yeah. We'll get Jeff. We're going to try to, we should get Jeff on for this week.
It's just with this Wednesday thing, that's kind of, it's really not messing things up, but it's just like, the market's being closed, 2 Wednesdays in a row. So there's time in between. So if you're playing that, well, at least for the first time, if you're playing the options market, you got to deal with 3 days of decay. But let's get to the biggest movie here, Rumble. That is trading higher after company announced its a strategic investment from Tether. Tether. Now, there's a big short interest here. I've never been on Rumble in the jungle here. I don't know. I'll just give you the pre-market high, and as always, when you get big moves like this and you want them to continue, it's always important to take out that pre-market high. That's 11.12. So you got some heavy lifting to get back up to that area. It has not been the high for the year. Was at 920. So there you go. But let's see if we can get up. That's it. I've never been on the platform, never used it. But getting a nice pop today. 20% short interest.
And in one thing, when you are talking news, and I trade news a lot, when you get news on a retail darling, it can have a lot bigger move than if there's just news, on something that nobody really cares about. So always think about that when you're looking at the news, and how much can something really move on something? Like somebody was saying, to me on Friday, like, how can Rumble be up this much on this news? And I'll say, one, because it's Rumble and there's social media just loves this stock. So, I mean, when you get a headline, Tether's putting investment in, it's vote of confidence, social media will drive that. Also, the algos know that, and they try to get ahead of it. There's certain stocks that will have more pronounced moves off of news. Rumble will be one of them. Does that mean the move holds? Does that mean the move, we don't know that. But I just know when you get that headline on something like that, it can have a big move. So I'm not surprised at 42%.
Okay. All right. I guess I get a next mover. Let's go to Qualcomm here. We've got
Yeah.
Qualcomm. Hmm. That stock has been in the dumpster though. Got some favorable news, I believe, regarding a court decision here with ARM. I see ARM trading in the red. Qualcomm trading up here. I mean, here's a beaten down stock. Hit 230 in June and did it trade under 150 on Friday? Put in a nice double bottom here. 149.43. Dennis trading up 441. I think you still own this one, don't you?
I've had Qualcomm in there a long time, and yeah, this news broke just after the bell. So the U.S. jury finding that Qualcomm did not breach NVIDIA's license agreement with ARM, and U.S. jury finds Qualcomm custom CPUs licensed under its deal with ARM as well. So this actually, on this news, ARM really fell like way. Like actually, I think ARM actually the algos knocked it down. I think 12 points, Joel. It was just a ridiculous move. If you look from Friday's action, I'm not sure you'll see it, but maybe it wasn't 12, but it was 8 or 9 anyways. I don't know what the low of the move. You have the low of the move?
123.37.
That would put it down $9. It bounced immediately. So the algo's way overshot. The news algo's like, oh my goodness, and sell first, ask questions later. They're hitting always, when you're doing after hours, you're hitting into nothingness too. Because there's not a lot of, there's some bids out there, but it's not like the stock's open where there's all kinds of liquidity there. So they way overshot. Way overshot. It's bounced here. They overshot the other way with Qualcomm as well because Qualcomm, I think, was up $10 on this initially and has given it back as well. So Qualcomm, here's a stock. I do own the stock, but it is in a downtrend now. It's a stock that hasn't been performing well really the entire year. I mean, it's one of the few, stocks that are it's up slightly on the year, I think, but not much, and given back most of it because this stock back in May was $230. So it's been a pretty good downslide here for Qualcomm. So stocks that are in downtrends, when they pop, they typically find sellers more often than stocks that are in uptrends. So just keep that in mind. Again, if you're trading news, stocks that are weak overall have a harder time holding gains. And that's what we've seen with Qualcomm the last few times it's had good headlines. They just don't seem to hold.
Mm-hmm. Mm-hmm. I'm looking at the 160 area here. The monthlies don't do much to confirm that, but just going back all the way, I know you see a higher high here, 162.93. Actually, in the in the after hours, 163.10. So we'll make that a 4-star. The fact that they coincided with the daily high. But I think if you look at this one and you don't want to chase it, but you want to buy it on strength. What if it could get a 160 bid here? I know there's not exact tops at that level, but just you've been in a prolonged downtrend. Now you're still $3 away from 160. Double bottom to lean on Qualcomm. I know Christian, this is probably not meeting any of your buy criteria, but what's your take on Qualcomm?
Yeah, still in the range. So nice little bounce, and move the opposite way for ARM. But yeah, Qualcomm is a no play for me now until it really begins to kind of do something. It even kind of leaned to the downside a bit, so actually underperforming the group a little bit. So no touch for me at this point.
And
Is
I mean, that's something you can do. You don't have to trade everything. And if you're long only, look for stocks that are more stronger, as opposed to buying the weak one. Oh, this is the turnaround story. Everybody likes a good turnaround story. But again, those are some of the toughest trades to call.
I mean, how about Broadcom? you know,
Well, that's
I,
not a turnaround story. That's just a story that has continued and continued and continued. And, Christian with a good call on this one again because he talked about this, although it's popping. And again, look at what is popping today. It's all the retail darlings, the stocks that have stories attached to them. AI story, obviously, AVGO is strong there too. It's up $6. So you're coming in here, over the weekend and thinking, well, what's going to, really be moving here this morning? It's everything they're talking about on your Discord and your Reddit and your, X and everywhere else they talk on social media. These are the stocks that are lifting here this morning.
Did you guys see the move on? Again, and I know we're going to talk a little bit about what happened at the end of the day on Friday, but look at Broadcom in the last like 15 minutes. So this was one of those names where it wasn't on the. I talked about Apple, which had a nice move into the close, but Broadcom, that was one of those names, and we talked about how you can play some of these things where there wasn't any news on it, but you could tell it was part of the rebalancing because it really got hit there in the
Yeah, it
last
did.
five minutes. So your reversion to the mean trade that you talked about, Dennis, where you can kind of pick up some of these things where they're just kind of like for lack of a better word, like a stupid move there at the end of the day, and it's already trading back.
Yeah, a lot of times you see, when you see huge sells on the close, for rebalancing reasons, for options expiration reasons, for all these reasons, a lot of times those are the best moves that actually show retracement because they're not done for fundamentals, they're done for order flow. So a lot of times those are the kind of moves you want to buy. AVGO, to your point, did sell off massively in the last few minutes of Friday's session. And like the last 12 minutes, we were down $6-7, which is a good 2% move, which is a big move for any stock. That's getting it right back. So I mean, Tesla too, at the end of the day, really sold off hard as well. And really overall, S&P's held up pretty good. So it wasn't like all stocks getting hit at the end of the day. It was selective, but the stocks that really got hit at the end of the day seem to be bouncing here this morning as well.
did those selling balances hold up on Friday morning? I know this is a long time ago, but you were saying, wow, if these
No,
hold up.
I can't remember the Friday morning now, but I do remember it not being more of a nothing burger. There looked like some huge imbalance. It's going to be a big open. It's going to be some stocks open some crazy prices, and then I do remember it was kind of like a nothing burger. There wasn't a lot of big action, so there may have been a few pops, but really it was pretty quiet, Joel.
Okay. And then I know the last few minutes are kind of, we're kind of herky jerky too here. But let's just like, talk a little bit technical setup. And Dennis, you can give your feel for it. I mean, we're kind of just going to the S&P here, kind of in no man's land here, right? Because if you're setting up, you really can't lean on Friday's lows, right? If you're going for a swing trade into the Santa Claus rally. And I don't know, it just doesn't like I saw the rally overnight and I saw it getting going. And I'm like, I just didn't feel like it was gonna get to Friday's high. You think they're just gonna like just have a couple quiet days? And Christian, I think you mentioned on Friday, wait until Thursday when they have the kids on the floor of the stock exchange or whatever.
Ha.
It's kind of in no man's land here. If you want to, as far as tradable lows, I mean, I'm not going to risk. I mean, the real low in the S&P was 150 handles lower here, Christian. What are you looking for setups? What are you leaning on?
Yeah, and I was just going to show my screen, which I don't
Okay,
have shares. Because I
put
have
it
a
up and I'll get it up there.
yeah,
Okay.
couple technicals that I was looking at too. To your point, when you looked at where we were, like around like 1 o'clock on Friday, it was a very, well, first of all, the move was very strong, but at that point at 1 o'clock, I was like, wow, this is really we're retracing a good portion of the move. But I do tend to really look at the 50-day moving average. I look at the 20-day moving average. Why do I do these things? Because I know a lot of institutional traders will buy around that 50-day moving average. And SPY did not close above the 50-day moving average. It was above their intraday. It also got into the 5-period moving average, which for me is a nice little gauge of short-term trend. So to your point, Joel, is like I got to see a little bit more of a move. And I did get long SPY in the morning, and I actually I took it off, and I could be a little bit short sighted with that, but right when we started to kind of move lower, I was like, hey, I need to see us get back above some of these important technicals that I feel like that 50-day moving average. So that's what I'll be watching today because I agree. I think we're in a little bit of like no man's land as we head into kind of a low volume type area. And by the way, the Santa Claus rally last year was not so great. It got off to a good start last year. It was up a couple days, and then if you remember, the first 2 days of 2024 were pretty bad. And that Santa Claus rally, if you measured those five last trading days of 2023 and the first two of 2024, the S&P was down 1%. So Santa didn't really come last year. So it's one of those things where sometimes I think when everybody's talking about something, it has less of a tendency to work. But yeah, I'm kind of pretty, open-minded. I really thought that those leaders stood out, and I think Dennis already mentioned like the quantum stocks are up again this morning. So
Yep.
for now, like these things are where people want to be, and the rest of the stuff. So I think it's going to be very interesting to see if those continue to kind of lead. But yeah, I think that we need to make more progress here on the S&P, and you could see like in the overnight session, future when I went to bed last night, I didn't go to bed quite as late as Triple D, but when I went to bed, futures were up nicely, and when I woke up this morning, I was like, oh,
Leaked it
I was
all.
like, yeah, we're leaking again. So I'm really paying attention to this 50-day moving average, and then if we can get above that, I want to see us get above the 5-period moving average because again, that just tells me short-term trend. Just looking at the Qs really quickly too. That also is just closed. Now again, stronger relative strength in the Qs, so did not get below the 50, but needs to get through the 20 and the 5.
Let's just talk the buck here real quick. It's something we don't talk about a lot,
Sure.
and that dollar has been strong, very strong. A little bit of a down day, and then right back up on today. But I mean, let's talk about the dollar. Let's talk about the TLT. I mean,
That's the dollar is just inverse TLT. It's
yep.
been that way for a long time. It's a rates play, obviously. Rates staying higher for longer, good for the US dollar. So a little bit of weakness, maybe off Goldsby comments, maybe off the light PCE on Friday. But again, does that just, get shrugged off just like the TLT, a little bit of strength showing on Friday and comes back in and they start to sell it here again. I mean, the trend where the TLT is absolutely not your friend. If you're long US dollars, the trend is very much your friend on the US dollar. But, to Spinner's point, is there a point in time, I can ask Christian too, where the US dollar, if it continues to show strength, is a headwind for some companies. Obviously companies that are selling stuff internationally here, it becomes more difficult when your dollar is that strong. Sometimes you want to balance. Like everybody wants a strong currency, but at a certain point, that strong currency can actually be a serious headwind because your goods are relatively more expensive compared to the rest of the world. Does the US dollar become a headwind in 2025?
Yeah, these are the two things that I'm really paying attention to because I agree with you guys with the dollar. I think that's not a good thing to see the dollar break out to new highs, and and I think it's also kind of a reason why we did leak some of those gains because the dollar's strong this morning, and also rates are up again this morning too. I was just showing this is the 30-year bond futures, and then I'll give the screen back to
Hmm.
Joel. But we're back. Like, there's, even though we had this bounce in bonds on Friday, we're not getting that today. And we do have three more there's, even though it's a light calendar for this
Oh
week,
my gosh.
you've
Yeah.
got three bond auctions this week. You've got the 2-year, which is at 1 o'clock today. You've got the 7-year, you got the 5-year, which is tomorrow, and you've got the 7-year. So the bond auctions will go on, and that brings on more supply to the bond market. So while it's very light in terms of economics, and Fed speakers are probably going to be light, they're still bringing more bonds onto the market this week with 3 bond auctions this week, which to me tells me it's going to be tough for bonds to rally if you've got that much supply coming on. But I think these are definitely things to watch.
Okay. All right. We did get some. I just want to talk Novo Nordisk, and then also real quickly, Lilly. Novo Nordisk got shellacked on Friday. That's coming.
Hmm.
That's coming back. But boy, oh boy, they took that opportunity. And Lilly, boy, oh boy, where was the open? Holy
I
mackerel!
thought they might fade it. We talked
Yeah,
a little bit of nervousness. I actually sold some VKTX into it again,
I saw that.
which has
Yeah.
been a dog. And sometimes you just got to say, the story has cooled off. The weight loss story has cooled off here. And, this, as we get more information, I mean, it would have been nice to sell the VKTX at 80 or 85 that day. And some people did. Congratulations to those that did. But I
I
mean,
did.
is the story come back? I think it can, but you got a lot of headwinds here now. This new administration, we talked about, the differences there. Obviously, rates staying higher for longer is not good for any biotech names. But just, it's buyer exhaustion when we just go to Lilly. I mean, the stock has been priced for perfection, and you're starting to see that as premiums start to come out here with Novo, their data not being as good, and Lilly gets the big pop. It's like, oh, they're all going to go to Lilly again. Well, they gave it all back. The stock literally gave it all back, and that's not what you want to see. Lilly is popping again this morning. It seems like this company does everything fundamentally right, because on Friday they came out with some news of another drug that was
Zepbound, FDA approves Eli Lilly's Zepbound for moderate to severe obstructive sleep apnea in adults with obesity. So it got the pop. Let's see where the wow.
and it is still holding to a certain extent, where we haven't even opened here. But because we don't appear to be holding pops in Lilly anymore, it makes me very hesitant to buy a pop in Lilly. So I mean, yeah, we're getting a nice lift here, but you just think about everybody that's bag holding it from Friday. It's like all of a sudden getting some of our money back here. I think you're running to overhead supply here again in Lilly. So it's just the tide has turned to a certain extent for all the weight loss names.
And as we said, Novo Nordisk, it got a nice bounce. I mean, how low did wow, that got to 81.50. Trade, ooh, getting some pop. There must be some news overnight. So buy the dippers. Prevailing here. Oh, BMO. Let's see. Not much. Maintains outperform on the stock. Still has a price target here of
I
105.
want to know Christian's thoughts on Lilly, because this stock matters. I mean, this is a stock that has, really held up most of the healthcare, like trying to hold it up by itself, because healthcare has not done well. The drug stocks, the other ones have not done well at all. Merck's been terrible. Pfizer's a disaster. It's really been Lilly holding up a lot of the drug indexes overall here. What are your thoughts here, though? I mean, this is starting to become concerning, Lilly. Is this just a check back, and eventually, the weight loss theme is going to continue, and Lilly will be making new all-time highs? Or has the story cooled off enough, the valuation's starting to matter?
I am long jumping jacks, and I am long Joel swimming at the pool, and
The real way.
and going to the gym. That's what I'm long. But no, seriously, this healthcare space has not been good, and we talked a little bit about this, and I think on Friday we talked about watch to see if these things leak, these bounces leak, and sure enough, Lilly closed, bounced up, and it closed on the lows of the session on
Yeah,
Friday. If that's not telling you something
yeah.
about a group, then I don't know. Sorry, I've got squawk in my ear. But but I don't know what else is when you have some type of, when you have price action like that. This group is out of favor. So when things go like this, I say, and if I happen to be in Lilly, I would have hit the register, rang the register on that. But for these things are just, they're not in favor. I continue to monitor, but I am underweight all of the biotech. I don't have a short position, but if you bring up the XLV chart, Joel, you'll see what I'm talking about. How
Oh,
how bad this group has been beaten up.
It's
So
been ugly.
I don't, I don't try to get in these things. I wait until you have better price action where, hey, if you want to see things close on their highs, not on their lows. So to me, I just pick up on what the market is telling me, what the price action is telling me, because price rules all to me. And when I see something bounce up like that in pre-market and it closes on the lows, I don't want to be a part of that group. And I will wait for when the institutions want to get back into this group. But same thing. Like I have tried biotech a couple times. I tried it after the election, and got disappointed with it, and that's okay, right? It's our job to kind of. Sorry, there's a headline on the tape.
what do we got?
Liverpool to buy Nordstrom family Liverpool to buy Nordstrom. So that's not Nordstrom. That's 24.25. So there's a deal on the tape. But I just wanted to mention that. I'm just
Okay.
going to put that in the room. But yeah, I mean, I will wait until the institutions feel like they want to get back involved. So that's my thought on this group. And yeah, and biotech has not worked out for me, like trying to finagle and get long that group. So I will continue to kind of monitor that group, but I think it's very important when you're going through and you're looking for stocks. I know some retail traders, they like to buy dips and things, but you've got to see it where it's not just retail traders. You've got to see the institutions come in and support these things and say, hey, this is good news and it should continue to go higher, not close on the lows.
And
Okay.
the sector, like again, to Christian's point, it's tough, to come in and call a turnaround here and say, RFK probably not, great news for biotech, obviously. And then obviously he's all about health, we talked about that as well, changes a few things. But then you just look, the XBI tape action has been terrible for a long time. I mean, we've had a nice little rally recently here, but then we're starting to give it back towards the end of the year here again. Like think about 2020, 2021, we're $174. I mean, here we are 4 years later, basically, and the XBI is still cut in half. So, I mean, we can say, there's definitely some diamonds in the rough, definitely some companies that are going to be acquired in the XBI. I still like my XBI weekend trades, even though it didn't work out great this weekend, although it's kind of just flat. But I just think, the tape, to Christian's point, price tells. And this group just continues to remain out of favor. And I don't know what turns it around. I'm not sure RFK turns it around either.
It's the same thing too with the industrial. Another group that was very strong. This two other groups that were very strong this year that are looking for a footing is industrial. So you could look at XLI. So again, like I just continue to monitor some of these groups because XLI did bounce on. Did have a nice move on Friday, but I don't see really any change in the picture. And one of the groups that I'm also struggling with a little bit too is the financials, which is XLF, or you could look at the regional bank ETFs too. But you know, this almost some of these almost have filled. If you look at that chart on the top right there, Joel, it has almost filled the election gap. And I'm wondering if these things have to, from a technical standpoint, I'm interested to hear what Joel says about this. Does this fill the election gap, and do some of these sectors have to do that?
We're leaking here a little bit. I see the election gap in here. I think you just have a confused market here. Very confused because you had that news on Wednesday that was like, oh, oh no, rates, and then Friday, then you get a like PCE. You're like Powell, like, did you know about the PCE when you were talking? And then you get Goolsby here. So I think the fact that you just have conflicting tariffs, no tariffs. What are we going to have? I think you have an indecision market here right now, and I mean, as far as the prospects for the Santa Claus rally, I just think there's just just too many unknowns out there. So I'm a fader. I don't know if Santa Claus is going to come to town, but
This is it's your both of your points. It's a difficult market to call right now because we have separation where some stocks have been going straight up. They go back to the well. They buy Palantir. They buy on Friday. It's up here again today. Retail stocks, the ones that are really loved with the stories, are still holding up and doing very well. But the stocks that don't have the stories, is the value names, just seem to not be able to catch a bid at all. And when they do catch a bid, they're just met with more sellers. So it is the tale of two markets. I mean, we can say how good of a year it was for stocks in the S&P, with the S&P being up, what are we up, 25% or something this year? It's a hell of a year for the S&P. But there has been just a lot of laggards, a lot of names just not participating. And a lot of those value names really, are the ones that are leading us down here right now. So the ones you think the catch-up trade potentially happening here has not been happening. Now, again, does it turn on the calendar? Do we get a value rally in the first couple weeks of January and a sell-off and growth? I think we can. Calendar turn off and does that. But what does that mean for the next 4 or 5 trading days of this year? I think, you're still staying with the Momo stocks, and the value names just don't want to catch a bid. So I don't want to be early there either. I think I might play them on January 2nd. But we're still 6 trading days from January 2nd here, including today. And again, with such ugliness here, as much as, people will be buying, maybe some stocks for the window dressing on some of those retail darlings, they may actually be selling some of these value names to say, hey, I don't have these dogs in my portfolio. And then the tax loss implications too, Christian, which we often talk about. Like a lot of these stocks that have underperformed actually get more selling pressure into the end of the year because people, that are sitting up way up in Tesla and Nvidia want to say, well, hey, I'm going to sell a couple of these dogs to offset some of those gains. So it's never usually a good call to call for a reversal 6 days before the end of the year. The reversals often happen on the calendar. So keep that in mind if you're trying to short Palantir today, or if you're trying to buy, other dogs like a Ford or GM, that have been dogs here. It's difficult for that turnaround to happen when there's so many other things going on like tax loss selling and window dressing.
all right, Dennis, we are talking up just right up the alley of our guest. It's a Monday. It's a market structure Monday. Ho, ho, ho. They're bringing on Tim Quast here. How you doing there,
That's,
Quast, on this market struck? We need some structure on this Monday. What's
that
going
was a fairly authentic ho ho ho. It's not as good as the John Travolta one in that ad that he's doing right now. Ho ho ho. I don't know if you've seen that. Maybe you haven't seen that. Okay, well then the joke falls flat. But anyway, ho, 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 back to you. Joel, good to see you guys. Happy holidays. Merry Christmas. Nice to be here.
Okay, I am just so anxious to talk to you. I know you got all excited, that consolidation in the S&P up near the top. You're like, it can't pass.
Nothing thrills me like consolidation, Joel.
Yes, I
just-
agree. Wow, Dennis, watch out on your bids there, man. We're like,
I know we're leaking fairly. I don't know if somebody
yeah.
said something here, but we are leaking substantially here on the
so
S&P.
the whole world knew that Powell would offer a hawkish cut, right?
Yeah, you would think.
And so
right?
we tightened.
Right.
Everybody, get out of the way. So talk about how you played it, right? And whether you expect this to continue again, the weakness in the market.
Right. Well, it's the great question. If only we could see around the corner, right? We all wish we could see around the corner. I do have something to share. In fact, I plugged this on Twitter. No, we have this. You do right before a commercial break, Joel. You say, when we come back, we'll share with you the thing that has never happened before. So what you need to do is you need to get some ads into PreMarket Prep.
We do need to get some ads. We need some revenue here, Tim. This is a zero revenue company right now. We need to figure this out. We're working on some things, folks. New Year is going to be very special for PreMarket Prep and all our listeners.
Awesome. Good job. I'm proud of you guys. It's always nice to be here. So how I play, you'll remember the last time I was on, I said, so I have my largest ever volatility bet heading into December options expirations and this Fed meeting. And those are risky things. They're not my preference. I like to take gains, not chances. I like small repeating gains. I call it the 1, 2, 3 rule. That SPY or the trackers like that of the market, the benchmarks tend to move 1%. In fact, if you factor out outliers in SPY over the entire market structure edge data set, which only goes back to 2017, it has to do with data sets and so on. But over that whole period of time, SPY averages 1% volatility. The underlying equities average 2%. That's why arbitrage is so profitable. And then momentum tends to average 3% or more. So you can get a good return in there. So heading into options expirations, the deterioration relative to midpoint in the entire market was astounding. You can look at the Dow was down, whatever it was, 9 or 10 straight days. But really, in the S&P 500, this was occurring too. And there was no volatility. The volatility of SPY dropped below 50 basis points. So I looked at that and said, wow, it would take nothing at all to have some of the most remarkable volatility ever. And sure enough, that was my largest ever one-day dollar return, not percentage return, on December 18th. And I sold early. I'd held it so long, I scared myself. Right, that I thought I'm just going to take this huge gain I've got. I could have made twice as much. It was just.
You use UVXY?
I use UVXY. Yeah, and you can hedge that too. You can use and by the way, folks, let me qualify this. I am not endorsing these leveraged synthetic products, which are derivatives of derivatives, but for short-term trading, when you understand market structure, Joel, you said we need some structure. Market structure are to me, the rules and the mechanics of the equity market. So understanding context, like options expirations and Fed announcements. Why does the Fed make policy statements when VIX options are expiring? It's a great opportunity for people like me who understand that is going to have a huge bearing on not just the leveraged instruments, but on the banks who then hedge the leverage they provide to these synthetic ETFs. Wow, you set up the probability that there's a ripple effect. And here's what I mean. So a UVXY will use a total return swap from someone. Pick a name, Goldman Sachs. Goldman Sachs will in turn hedge its exposure to UVXY by trying to offload a product to some buyer or seller. Now you have multiple parties exposed to that. And so in some ways, it may not matter. We could all know the Fed could signal for weeks in advance that this may be the last cut for a while. We're going to do, quote unquote, a hawkish cut. And that isn't the problem. The problem is the VIX expirations hitting at the same time. You have no idea what's going to happen. So traders and investors, you have to be aware of that. You have to be aware of context and how volatility and supply and demand relate to each other. Demand supply imbalance. We had falling demand, rising supply, and the lapse of volatility instruments. Wow, you could have an unbelievable event. That's what I bet on. So, it doesn't always, those things don't always work, happen to work this time.
Hey, Tim, great to see you. And, there's a few things that I was going to mention there. It's like, I'm not a big advocate either of the some of the leverage products with like the UVXY, and I don't really like the VXX as well. But the point is that if volatility is going to increase, even though they have horrible slippage on a day-to-day, but if you get that move right, if it's a large spike in the VIX, that slippage that from day to day that happens in these instruments, it doesn't matter that on that particular day, where you can really make money on those products. And then I just wanted to mention too, because I have issues with that too. Sometimes if I'm sitting in a trade where I've got an idea and it's kind of like bleeding a little bit in terms of it's not working, and then all of a sudden you get the move that you're looking for, I tend to hit that sell button too a little bit quick, because you're sitting there, you're trying to be patient, and you kind of like you lose the reason why you put the trade on in the first place. Not lose it, but you're like, So it's kind of interesting. I wanted to hear what Dennis thought about that too. Like having on a trade, and when the trade kind of goes negative on you a little bit, and you kind of start to psych yourself out a little bit. But I just wanted to say,
Right.
number one, congratulations on your gain, because that was a great call.
Well,
And
I can blow it just as easily, Christian, so you pride goes before a fall. So it's, it's even dicey to talk about these things. Like, you start
I same thing. I'm like, I'm always get scared talking about a good day because I'm like jinxing myself.
Right.
Real quickly, they did not like this Chicago Fed national activity for November. That came in down 0.12% versus negative 0.4 prior, revised down to 0.50. I don't know what the hell that is, index, or what that means, but perfectly correlating here. 8:30 is when that number came out. So we lost some momentum here. Made a new pre-market low. Now attempting to rebound, but I just wanted to mention that.
Let me add a thought around this, Joel, because this is another reason that I didn't commit to the same size, but I put on another volatility. I have a long short position in the market because, and I'll tell you why. I'll show you why. I don't know which direction the market's going to go. I can make a case that it could go either direction, but I did enter a volatility trade right at the end of the day on Friday, and it's because of what's happening today. So here's my thesis: that you have on Friday, and options expirations are not a one-day event. They're basically a 5-day event. So you had VIX expirations with the Fed announcement on the 18th. The 19th are AM dates, the only European style instrument in the US market. You have AM dated options and futures on the S&P 500 and other indices. Well, those are very big products for passive instruments internationally. And so if those things reset and there's an imbalance, you can have trouble. Then on Friday, we had the last day for quarterly index rebalances. We had a quad witch. I don't even know if there is a quad witch anymore, but it's a quarterly reset of options. And there was no volatility at all. Well, what would cause that? After a huge volatility event, and I still haven't told you the thing that has never happened before, that happened this last week. So my thesis is that most of what happened behind the gains on Friday was people getting called because everybody had sold volatility. No one was anticipating one of the most violent volatility events that we have seen. And I think they got called. Well, that would take all the volatility out of the market because all of those instruments have dates and prices. So that would cause the market to lose all its volatility, which would mean possibly today, new options trade that, and down through history, some of the most violent volatility events have occurred with new options trading, September, whatever it was, 24th, 2015. So I thought, well, maybe it manifests today. So I think you could take one little trigger, like it could be a manufacturing data point. It could be this thing, it could be that thing, but it really ties to, do people re-up their options positions today, right before the holidays? I would surmise they might not. And if they don't, the market can take a clocking that nobody's expecting.
I mean, we didn't expect the clocking last week with the Fed, obviously,
Yep.
Powell really pulling the rug on basically everything. So this market, we've seen some rug pulls already happen here. We get the snapback Goldsby rally on Friday here. Can you break it? Because everybody's asking for your system here too. Can you break into market structure edge here, Tim? Show us some stuff. Just give us some thoughts here overall on, because obviously, it's been the tale of two markets. It's been some very strong stocks, some weak stocks here. But, Fed speak is driving the bus here right now. One, what are your thoughts on that? And then two, what's market structure edge thing?
So I want to share two things. Here is one, and it looks really messy. I'll explain what this is.
Oh my gosh. It does look a little bit messy.
It looks like a child did this, and it was me. So, the emotional maturity of a child, but I do know some things about market structure. Okay, so what this is showing us is SPY. And if you look at these orange spikes, these are periods where there was volatility in SPY. And so I track the number of times that we've had 3% or more volatility. And what's fascinating is that 85% of them occur during bear markets. So you could go back here, huge spike back in 2018. In fact, December 26, 2018, the Dow fell 1,000 points. And I could tell you there are many things similar to 2018, including Jay Powell, who was the new chair at the time. He came in at the beginning of 2018, and he ended a rate cycle December of 2018. So is there one ending here? Well, he said, well, we're probably pausing cuts. I don't know, but here's, I'm going to conclude over here with what just happened. So then, in 2018, very volatile, two big volatility periods. Here's the pandemic, the most volatile of all. Then we had 2022, bear market, very volatile. And what always precedes and ends these is a spike of 3% in volatility in the SPY. And the last one we had was December 22, 2022, the end of the bear market of 2022. And we had one Wednesday. This was the most violent movement in volatility of the SPY that I can find ever. It was 825%. If you went from the volatility of SPY on December 17 and the change to December 18, it is the most violent move of volatility in the data set ever. Now, maybe it doesn't mean anything. The only thing that's unsettling to me is it has meant nothing only one time ever. Late October of 2020, we had a volatility spike and it went away. But otherwise, these things always indicate the beginnings or ends of things. And so I look at this and say, something is beginning or ending. I don't know what it is. Is it the end of a pullback cycle, or is it the beginning of a bear market? It's one or the other. And I want to show you something else from a market structure standpoint.
Okay.
So let me move this and let me show you this. So here is another messy chart, but it's very simple, and I'll highlight it for you. So this is supply, short volume, in the S&P 500. The green part of the graph is demand in the S&P 500. And this is SPY, the price, right here, the gray part. So here's a bull market, a lot of green. You can see it. Bull market's ending. And it will give you a signal quite a while in advance. Demand begins to lose its momentum. And here's the bear market. Lots of moves lower. So even from here to here, this was not a great market in 2023. We had gains, but we only got back to where we were at the end of 2021. Then we have the Fed rate cut cycle commence. Bull market, booming green section of the graph. Where are we now? Well, we're here. This to me is much more like this. Now, I'm not saying it's the end of a bull market, but I'm saying it's possible. Then if you look at the supply side, so the supply side declined when the great pandemic bull market took off. It declined when the bear market ended, and it declined with the Fed rate cut right in here. And look at it now, big decline. But then it rose at each of those points. So I could say, is it the beginning of a bull market, or is it the end of a bull market? Well, all that stuff stands out to me. So, if you're trying to look ahead and understand what's coming, I would make a case that because we have not had a bear market in an extended, more than the usual cycle. Usually you have a 10% correction every 18 months. So could it be that we are headed, now something could change it, but I would argue that we might be heading, could be weeks or months, but I look at these things, I look at all those factors, the volatility, what is happening on the demand supply equation, and I would make a case we might be heading into a bear market. Doesn't mean it starts today, but those are the conditions that I see from a market structure standpoint.
Tim, this is great stuff. And I think also, as well, as once we get into the new year, you know, the new year didn't start off well last year, and I'm in
Yep.
no rush personally. I want to see how things go, and those are great charts that you display. You know, talking about some of the relationship between demand and supply. What do you? I also look very. We were having a discussion about sectors and how many sectors are really getting beaten up versus some
Yep.
that are hanging in there. Like tech and consumer discretionary doing well. What are you seeing in terms of supply and demand and on your screens?
Okay, so we always look at momentum and low volatility, and then I'll come to sectors because we have all the sectors on edge. Put them there for users so that you can always look and say, well, how's the communication services sector doing or whatever. But look at this. Momentum has 4 names in it. Low volatility has 6 names in it. In a good market for trading either one and producing a 1 or 2% gain every day, that's kind of the target when those conditions exist. And we're using supply demand asymmetries and volatility for those purposes. You could have 30, 40, 50 of them. There's nothing, right? So this tells us that, to Joel, kind of to your point, there is nothing in the market that has certainty right now. Because if there is, the conditions manifest and we can find them. We can screen quantitatively for them. Now, if I look across all the sectors, I could even narrow it down to like an AI portfolio. How does that look? Well, plunging demand, supply's okay, but I wouldn't buy that. Airlines and cruise ships, I'd short that. Look at this, screaming supply, plunging demand. That's a group to short. Big tech, plunging demand, supply's fine, but the 30-day trend is up. Communication services, falling demand. There's a convergence. It's not a strong one, but again, you'd look at that and say, well, I can't tell if that's going to go up or down, right? It's not a good thing to trade. Consumer discretionary, same, falling demand, rising supply. Don't buy that. Don't go long. Consumer staples, falling demand, rising supply. Crypto stocks, falling demand, falling supply. That's a little better, but it's not great.
You're not making me feel all warm and fuzzy inside here.
This is cringe stuff.
I'll give you one thing that looks good to me. Semis have rising, but it's below 5. Rising demand and supply that's starting to tip down. That's the only thing in the entire market that I can find that I go, well, there's a chance those could go up. But it's so bad. Total market. Look at the total. This is basically, it'll weed out a few things. It's the Russell 3000, 99.9% of market cap. And I'd look at it and say, falling demand, rising supply, probably short that. But here's the offset. The only offset I can give you is in broad market sentiment, where we have dipped below the green line. Green means go. Every time the demand drops below the green line, we get a short, could be long, move up. So it's fascinating how we're right at this path divided in a yellow wood, where it depends on which one we take.
Sometimes I know, like, one of the things that I always, think about is, like, I don't argue with price, but do you have a feeling like this issue with demand,
Yep.
and I don't want to argue with that there's not demand, but do you have any reasoning why you think demand is trailed off like this?
Yeah, I think that there's almost no reason for the big dollars, and this is how you have to think about it, right? Who are the largest holders of equity assets? Well, you could rattle them off: BlackRock, Vanguard, Fidelity, State Street, UBS, Credit Suisse combo, JP Morgan, Morgan Stanley. 70% of those assets run on models, $45 trillion, $48 trillion of assets. Are they going to? I don't see any patterns of rebalance activity to speak of. That was a big event last week. So I don't think money is being committed to this market. And so that doesn't happen. Then you take the 50% of volume coming from Citadel et al., who have investment horizons of a day or less. They're just market makers. And they're like, well, we're going to, what are they going to do? Well, and they don't depend on other behaviors, but they exploit other behaviors. And so you have these two things that are 75% of the market, and they're not doing much. Well, that to me is an explanation for an absence of demand.
Okay, we've been on the line with Tim Quast. He's joining us here on this Monday, Market Structure Monday. Tim, fun. We'll be dialing you up in the new year. Great information, and
we'll have a happier message. right?
Yeah.
Yeah,
Okay. No, you know what? I mean, you made a lot of great points here, but like volatility begets more volatility.
it does.
And
Yep.
it's just the timing of it because if you came in all bearish on Friday after, and you're like,
Right,
oh, just, the fall, then you got mowed over,
right.
right?
And I
And
traded it
even if,
long. I traded
yeah,
it long. I traded
yeah,
CRDO right off the bat, and I traded SPXL, and I took gains in those, and then put on the volatility short. And I was a little early, but you're right. You're right. You really have to, you have to be aware of what's occurring.
okay. Thanks,
All right.
Tim. We'll be
Happy
dialing
New
you
Year,
up
you guys.
in
Thank you.
2025.
Thanks,
Okay,
Tim.
folks. A nice sell-off there. I mentioned what I thought the catalyst was there. Dennis, what are you seeing under the hood?
Weakness in the value names. So we're seeing staples are very weak here. We're seeing some of the cyclical names like Caterpillar looking weak. But really looking, banks looking weakness. It's the value. If I'm looking overall, it's not a value day. It's more of a growthy day. And the names that are up today are the retail darlings. And again, calendars matter. Seasonality matters. So we can get all bearish and we can do, but I just worry that we're a little bit early to start saying let's pull the rug on some of these, bubbles that are there because we know bubbles like to inflate, especially into the end of the year. I think January 2nd, I like the market pullback better than I do on December 23rd. So I don't want to be early coming in and going rah rah, bears win. With that being said, thinner markets, we do move, on, headlines. There is Fed speak, that just comes out of nowhere, it seems like. That
Out of
will drive
nowhere.
the bus as
Out of
well.
nowhere.
So you got to be somewhat careful in these markets because when you are in holiday trade, they are thin and you can have violent little moves. That can work in your favor too, though. It can give you good exits, can give you good entries into stuff maybe you want to get into. But really, when you look at today, tech's fairly strong, which has been the theme all year, and value names are kind of weak, which has been the theme all year.
Dennis, you mentioned this about a week ago. I think when Joel was out, we were talking about the possibility of like the rotation into some of the unloved names, and you've been spot on so far. You told me, you said wait, you said it's a little bit too early, and you've been spot on for that so far. So I'm continuing to listen to you here about don't get involved in these names too early when it's just not there, because it's just these names are continuing to go down. And to your point, weak again this morning, so there's no reason to kind of, in my opinion, like I think you're doing a great job calling this and saying, hey, wait until that seasonality does kick in when it's supposed to, rather than trying to front run some of these things. So important. One other I was going to just make one other point really quick, is that also it could be that a lot of these institutions, the market has had a very good year, perhaps that folks just don't want to press it the last week of the year when there's not much reward if
Nothing.
if you've already had a decent year.
Okay. All right. We're gonna wrap things up here. I think for me, I think today, the next couple days, I think the tell is we had the quad witch expiration, and a lot of times that marks turning points in the market. So S&P, I'm just going to give you 6,000 in the March 25 S&P futures. And then I'm going to give you for the Spider, where was the close on the Spider on Friday? The close on Spider was just under 591. So I'm going to look at those two levels. I think, in those things, if it's the battle of 6,000 the S&Ps, if the bulls can just shrug that off from last week, we're gonna get a bid here. We're gonna hold those gains. We're gonna take out Friday's high. If not, when the bears start to establish that wall at this area, then I don't know. We're a long ways away from Friday's low. But I think you're gonna see some chop today. I think you're gonna see some battling. Don't think you're gonna see. It's gonna be an inside day. How's that for a prediction? It's gonna be an inside day in the S&Ps. 50 handles, 60 handles off the high, and 130 handles off the low. But tomorrow, I know we have a abbreviated session. We have Mich Schneider coming on, and at 8:35, and markets are only open till 1. So short session tomorrow. Let's see what the volatility gives us today. And thanks for joining us here on Pre-Market Prep.